Yes, beautiful people, it's the Market Sniper here, and we're going to talk to you about Amazon. Yes, your one world online portal retail order. That's right. And we're going to tell you some amazing conclusions that we've come to with regards to this corporation. Is it now an ex-growth company? And is the cycle really now turning that you should be looking into the anti-fiat as an alternative hold over this legendary member of the FANGs? Let's get straight to it and take you to the charts. Bang. Okay, 3 monthly. This literally captures from the listing of Amazon in and around the 98, 97 period, the run into the dot-com boom that saw everything go absolutely haywire. Of course, some of you will remember that Amazon hit a high of the 90s during that period. That is, of course, no longer reflecting in these numbers because of share splits, 97, and then fell all the way down to $4, $5, $6, which is now rescaled because of multiple splits and stock splits, etc. But against the dollar, and this is important, this is the US dollar, this just looks like a one-way bet that has just gone and gone. Please take note, this is a log scale chart. This is a log scale chart. Just to give you the normal scaling, a quick reminder to how that chart would look. Something more like that, for example, which is a hockey stick. So let's get into it, log scale. So what you can see is that you've had over this number of decades, so this is going to go right back to 97, take you right through 23. So you're talking about, what's that, 26, almost 3 decades worth of existence for this particular stock. And this is what we've highlighted for you, this sustained period, particularly, as I say, against the dollar. We're going to be looking at this very metric against other real money, non-proliferated fiats, because Amazon and the stock market as a whole has been boosted by the proliferation strategies of the central banking cartel that puts you on a slippery pole of inflation. So like a monkey, you're always sliding down. That is it. And that, of course, supports, with an inflationary element, the stock market to a point where it's now become hypervalued, which could be about a turn and change. Let's have a look at the annotations that I've got on there. We'll leave the ones at the end out until we drop a time frame, but you can see this is long-term macro rising wedge. Since the correction, this was a super boom that was very short and violent, short relative to the duration that we're looking at. The dot-com boom still was 3 or 4 years to the high and the back down. And then subsequently squeezing ever higher into a tightening range, wedgie, which we say has broken. Let's have a look in this action and this mess and this bedlam that I've drawn for you over here. So we're going from the 3 month and we're dropping radically down to the weekly time frame. So it's quite a lot. 3 months, bear in mind, you got an average of 4.5 months, 4.5 weeks in each one of them. So you're talking about 14 odd weeks down to 1. So this is 1/14th, right at the top end of the break of the channel. You'll also note that the break of the rising wedge, yes, that occurred over here. Let's grab him over here. Was also a triggering event for one of our complex head and shoulders. In fact, this was during our friend Mr. Hunter's go long the stock market for 60% in 4 months. That was in and around this time here, March, April of 22, that I think it was, that we were saying, no, things are going to go down, And this is the manner in which they went down. Let's just grab ourselves a line here. There's your left shoulder. There's your complex head down to there. These are armpits 2 and 1. And then you've got a flag-like structure. Yes, there's us drawing the flag, midpoints. All these draws are from some time ago, and your triggering event on your head and shoulder. That saw you make that target and actually return rally on proliferation promises and pivot promises, that's right, that led to a broadening structure, which saw you again break to the downside and is now leading to a rising wedge structure where the target is almost the legacy target of 110. Don't forget, this next line was at 145, and that right there was just shy of $200 at around $188. $188, now 103. Has the tide turned for the mega growth of Amazon? Well, yes is the answer, in our opinion, substantially so. But there is a key trend in trend, and to understand it, you have to understand the original trend of fiat proliferation. Part of the problem is the fact that we've used a dollar in this charting. So here we pivot and change, and we're going to take Amazon versus gold. Amazon versus gold. Real money, my friends. Ooh, let's see how that chart looks, and work with me as we get through to what is a riotous conclusion that says, yes, my friends, the time is actually for the anti-fiat brigade to be overweight and to be underweight. Remember, online retailer, before we do this, let's just go over the revenues of Amazon, by the way. Revenues. This is an online retailer by name. Yes, there's Amazon Web Services, where you'll have the military industrial complex paying revenue to the likes of AWS, and they also pay to Microsoft, all the other dark status companies. You'll have a subscription services business thrown in there. You've got third-party seller services. You've got physical stores, which is actually still a retail, but we'll say, let's just say the dark part, online. It's still well over 50%. It's 50.4% of everything. You, my friend, the online retail consumer, we had a surge of people learning and discovering how to buy online, trust online, and have delivered to their door. So exciting, so exciting. We all did it. Oh, parcels, parcels, Christmas every day. Just go get your credit card, financially extend, proliferate, buy some stuff. It creates some debt. That's right. It was all so easy. Have parcels delivered to your door. Isn't this fun? So you had that surge, but the bills came later. The bills came later, and more people are learning that. And as we are about to go into a week of tightening into an already proven recession, online buying, easy as it is, easier than going to the store to buy, is going to be less of a priority as people's credit card bills go up. Their ability to spend more online is being ever greatly impaired. So 50.4% of this business is revenue based on online retailing. The other part, kind of physical store, pop down to the Amazon store, is also retailing, also relies on the retail consumer. And even other things such as the subscription services has a retail consumer element to it. I would say probably only the web services and the other things that deal more with the megacorps will insulate them from a smashed retail consumer. You have a decade plus, decade and a half, 2 decades maybe, plus an intervention of a CBDC, no doubt, to shake off a hyper stagflation that was caused by a hyper asset inflation with low globalization and low input costs for inflation. So rates were artificially low for too long. In the search for yield in the 40 years, we had super low interest rates that saw an absolute debt expansion. You have to detox that, and as a result, this is going to be a difficult time for the retail consumer coming, and I think it affects Amazon stock. So let's go back to that chart that we're about to pull up. Go to the 3-month time frame. So what are we looking now at, lovely people, friends, ladies and damsels of the ministry, and the gentlemen's? They're allowed to, aren't they? Yes, indeed. Amazon divided by gold. Amazon divided by gold over the same 3 months. Amazon divided by gold over the same 3 months. And here's what's interesting about the online retailer. The online retailer had a super boom apart from its .com mega ramp and then dump. It had a super boom. But more interestingly, divided by gold, it had one of the most technically perfect upside HVFs you've ever seen in your life. There she blows, there she blows, there she blows. And that led to a perfect run of a target. During that period, roughly from the low here of that hammer wick, which would have been 2011, round about April 2011, all the way, you were in an amazing channel trend all the way into targets. You had the better part of, you wait for it, and you'll see this when we look at the silver as well, 99 months of absolute outright Amazon overperformance. Remember, this is on a log scale again, a log scale. So gold, even against gold, which, remember, hit the lows post-dot-com boom, round about here, of around $258, round about then. And since then, today, $2,000, 10 times up. This is better than the dollar, my friends, which is still only $1. That's right, $2,000. Oh, but the gold never paid you any interest. It only went up 10 times. Terrible. I feel robbed. I feel robbed of interest with more depreciating token dollar paper. Ooh, yes, anyway, I sense digression. Let's take the log off and show you that chart in full. Let's remove our crazy jaws. That's how flat that pancake looks. That is your parabola, my friends, into a perfect target make, no less, a perfect target make. I should actually multiply this by 100 because these decimals are crazy, 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 crazy. Let's see if we can do that. There you go. The values you get, you lose all your drawings, of course. The values you get are more commonsensical. So what you had back here, in and around this move, from around there, you went from roughly 47 cents to overperformance to $10.44. So if you double 47, you essentially get $1, and then you go up 10 to 10. It's a double and 10, that's 20 times, and then it's still at another 40 cents on there, so you're about 21 times. 21 times overperformance to gold through the 99 months. The 99 months of 2011, April to around July. That's right, the 99 months, we'll show you that in more detail. So that gives you a common sense number over there, but I want my jaws back. Why? Because he says we are going to have a look at the head and shoulders that has since transpired. So let's have a look at that, and to that we're going to jump from the 3 monthly, bang, to the weekly. And think about this at a macro level of what this is implying. Your FANGs. Now remember, this isn't Google or Microsoft, which has a lot more corporate clients and everything. There is an online retailer, and the retail is crushed element to this that is seeing Amazon underperform the likes of, say, a Microsoft and a Google. But within that, it was also part of the go-go FANGs and the bringing retail everything to this New World Order purchasing site with great delivery structures. That's right. Now that is in a head and shoulder. You made that target perfectly. What a beautiful method HVF method is. By the way, click the first link in the description below and book a call. If you don't have HVF method, charts make no sense. It truly doesn't. You need the emphasis on key levels of significance, horizontal lines, cross-market analysis, 360-degree vision. You need to understand what's important and what's not, why we have no moving averages, why we have no RSIs, why we have no momentum indicators. You need to understand the massive significance of volatility for real trades. You don't just do analysis without getting to a real trade. What is the real trade? Wait and see, keep watching. But smash the like button, hit the subscribe, and hit the always button as well. If you feel ready to book that call, it's time to do it, because we are giving you the macro end of trend view that was an Amazon bias macro long to something else taking over and being really, really strong. And here we go. This is a head and shoulders. Perfect, just target make. Boom, 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 neckline. You've started the breakdown. You're getting a rising wedge rally. Return to the neckline before spilling further. And these multiples will slip far, far away. So you're at about 0.1 here. That would be about the equivalent of 10 on the multiply by 100. And this possible return could see you run all the way down to about 2%, $2. So that's a fifth. That means the other asset is going to 5 times overperform your Amazon stock. What's the other asset? It's gold. It's real money. It's real money. It's going to 5 times overperform your Amazon stock. That could be made up of any number of combinations, guys. Amazon could halve and gold could 2.5x. It could be made up of Amazon holding its own and gold going up 5x. So a little bit down, a little bit up, a little bit down, a little bit up. 5 years later, it's still roughly where it was. Gold 5 times more. Okay, and don't forget, you're going to love the silver, which is coming next. Down, 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 all the way possible, also as a super target right the way down to the funnel move. That could see your consumer completely wrecked, as the beautiful people of the Bolshevik Revolution, then the technocratic corporatocracy, which is fascism, and the Bolshevik communism, which is state injected into your personal life through the double vectors of corporation and state, will reduce the middle class to a piffling group of 3 or 4 very smart people, of which I aim to be one. Do you want to be in my island of prosperity as one of the other 2? Yes, you can, but you have to be smart. You have to build wealth in reset times, and you need to click that first link below to book a call to find out how you're going to make great trades during this period, as you are watching one of the most largest cyclical turning. And we are the guys that told you in 2020 August that the March 2020 events was the turning of the bond market, was the turning for the metals market. And we are further reiterating to you that despite the fundamentals of the subsequent stimulus that took you into July 21 on equities, this equity is in fact also in a terminal decline in relative performance to a category that represents real money. That's right, it's gold, and that is it. So that is the gold, and this is the reversal we've seen on the gold. We're going to show you something else. Let's do it again. Let's do it with high gloss silver. That's beautiful, beautiful. Oh, I love the feeling of silver and gold, don't you? Let's go back up to that macro 3 monthly chart and show you how it goes. And here it goes. Same structured HVF. We've put some annotations in there to be friendly and clear in our crazy charting mega time frames. We love the big time frames. We'd go back to the 1800s if we could on every market, if it was allowed, possible and able. Only some unfortunately can facilitate. The Amazon only really listed in and around 97, so this is why you're seeing it only go so far back. Here's that 1st of April low, 2011. That's when it fell out of the channel. That red candle there is the falling out of the channel. 1st of July 2019. 8 years and 3 months, 99 months in total. That's right, 99 months of total of pure bull dominance in a channel within a macro HVF. That is the value of trading with HVFs. Consistent, steady, low volatility. Look at the volatility since, and the chops and the swings, gains on a macro basis. Beautiful, beautiful, beautiful indeed. That is absolutely beautiful. That is HVF method. You can learn how to do it too on a log scale, on a super macro time frame. Let's go to the weekly time frames and have a little look more. Let's have a little look more. Okay, here we go, here we go, here we go. Ooh, head and shoulders. We don't need to draw the neckline. Why don't we need to draw the neckline? Because our target that was made is in fact the perfect neckline for this downside structure, which has also had a right shoulder, a triggering event, armpit 1, armpit 2, there's your head, and is in a state of decline that will see it run from 4s, which was actually up at 4.4s already, it's already shedding, 4.08, so silver up, Amazon down, through the 2.7 that is being shown here, and the possibility of a far greater sell-off on a far larger scale. That would take you sub 1. So what is the sub 1? Well, it means that Amazon can, depending on how far it falls in terms of this, can underperform silver as well by at least a 4x multiple, which could mean silver going up even more. Now, the likelihood of an overshoot, you've got to remember, silver is underperforming now, so the structures and targets it's giving are actually smaller by degree than what it will likely finish as the schizophrenic smaller sister to the God market that is gold. I would expect even greater overperformance here from the silver market than I would against the gold. Why? Because when that silver starts running, it runs hard, and very fast. So supreme turns available in Amazon. So Amazon, the online retailer, what is this probably flagging? The reduced power and significance of the retail consumer. A general coming off potentially of all FANGs, relative valuations, overextended is also possible. That could see others that are less exposed to the online retailing world also suffer some degree, because Microsoft still have some retail consumers, Their corporate clients will have retail consumers at the end of them, etc. So you could see FANG's underperformance generally. Of course, we've chosen the online retailer for specific reasons. It's directly tied to the consumer by 50.4 of the business, 4%, and then it has physical stores as well, which is also online consumer directly significant. So it's our chosen one for shortness. And it's one of the most loved equities still to this day. However, silver will overperform Amazon. This is a cyclical change of 99 months. Beautiful people. Think of 99 months in a trading lifetime. Look at this baby go. Look at it go. By the way, it was a chronic overperformance. Let's just also delog this one and just show you. That's the beginning of that April overperformance. That is what a melt-up looks like, friends. That is what a melt-up looks like, and that's a parabola. And that was extreme performance. However, having run that target, having set up head and shoulders, you can see that there could be a very, very different story for the relative performance of the precious metals category, the monetized precious metal category of gold and silver versus the online retailer and the FANG cool universal New World Order purchase portal run a la the Rockefeller model with no trade unions, not allowed to complain. How much time did you spend on the potty? I use 1,000 Amazon employees' potty time every day. I flaunt the fact. I sit back and I read. That is my executive privilege as someone who's building his own wealth in reset season and will not be dictated to by some kibbutz communism oligopoly corporation, who I will take some delight in seeing losing value as I hold my silver, gold, precious metals, and later mining stocks that will benefit greatly at the time as they are hitting a rather mature and less cool stage of their life cycle. What do you say to that? If you like that, hit the like button right now, smash the link to book a call in the description below, and get started, because there are real trends being highlighted to you by someone prepared to do macro charting, log scale, cross-party assets worth real money at different equities, who's here to tell you his best truth that he can distill from the charts, which are the footprints in the sand, my good friends. That right there is the alpha you get with the market sniper and his merry band of traders in our community. Okay, so what about if we do something a little different? Because you see, I know you, Mr. Retail Trader, you are psychologically battling to see things that go down, and you love to buy things that are very low that might turn. So I'm going to play a trick on your bias, because it's hard for you to see that selling off, but I know a way you will see it. And I will do the following. I am going to invert the chart, and I'm going to show you Amazon against gold, because every single one of you are dirty-fingered little bottom pickers. That's right, picking your bottom. Just don't eat it, okay? Unless you're Gordon Brown and you did the gold era of all gold eras, then you deserve to be made to eat shit. But anyway, let's keep the dirty language to a minimum. YouTube disapproves greatly. You know, there is a moral component to our dark states that are warmongers. There's a great moral component, and we should respect the honor of thieves. Anyway, so inverted structure over here. Down, down, down she goes all the way, bang on target, inverted HVF, smack. Fan me brow with a kipper, and HVF's just called the bottom, just like it's did the 16,100 level on Bitcoin that ran no more than 15.7 after a head and shoulders at the top, and is now giving you an inverted to the upside. We're doing the same thing on a mega cap equity, which is based on online retail portal that is being compared against real money, gold and silver. So this is again gold, but you're looking at the chart inverted. Now I'm going to take you into the lower time frames and show you it on the weekly time frame, so that you can see Amazon versus gold inverted. Because bottom pickers you are, it'll be so much easier for you to spot the bullishness now. Of course he says, tricking you with your own psychological biases. That is what the corporate dark state does, and I am weaponizing this to help save you and help you build wealth in reset times. That is your left shoulder, that is your head. Look at it go, look at it go. Look at that grind line, had to be broken, attempted to rally too soon, wasn't strong enough, got dragged for a marginally lower low. Damned by faint praise. Damned by faint praise. Marginally lower lows are dangerous things, especially coming from a much lower place down here than way up there. Yes, indeed. That failure was the beginning of a rounding. Of course, the target was amazingly hit after your 99 months. Yep, 99. Oh, Jay-Z did a song. I'll really screw up the algorithm if I tell you that one. But anyway, that's your low, up. Here's your right shoulder. Here she comes, down, up and go. And oh, hold on. What is this? What is this, you cry? We have a winding up structure. Very, very interesting. So much easier to see bullish upside down. Yes, you're talking to the guy that regularly turns his charts upside down to help people like you with obvious biases that can't see some things one way to turn them so that you can see them. This is an inverted head and shoulder with an upside HVF on a neckline at the current levels that you see here, with further projections that will insinuate that gold is going to go up and Amazon likely down, or both are going to go up and gold significantly more so, or both could go down but gold barely and Amazon significantly so. There you go. Those are all the permutations and combinations, and you guess what? Providing your time frame is long enough, I'm on the gold long. Exactly right. And you could see further downside and at least flatness for your online world portal new recession-bound consumers as they drag Amazon down. That's right. This in the week, of course, that the chief Satan, the Federal Reserve, will in fact be upping rates into the peak of a recession because they were so late to the inflation they caused previously that has damaged you, and then denied its existence only to suddenly play catch up and overshoot again to cause an even bigger dip and recession so that they can repeat the cycle and enrich themselves while the military industrial complex equities are all hitting new highs and government is the spender of last resort and the middle class are being destroyed by the hyper stagflationary environment that they themselves have created. That's right. We say this as bank failures are occurring. All the small and regional banks, by the way, let's do a little news snippet. What the hell? I'm guessing, all those big oligarchical megacorp too big to fail banks, they're busy in their dealing rooms shorting all their favorite real high quality local and regional community banks through the ground so that they can cause fear and stampede the cattle out of, move their deposits, creating a manufactured crisis in every financial institution whose main and only reason is because it's small and the big media and the big trading rooms of the mega banks can cause a stampede in the environment that they created themselves along with their Federal Reserve that they themselves own, which is a private company, of course, owned by those same very banks, so that they can then choose, select and buy on the cheap crashed equities in small regional community banks, which have probably better earnings ratios than they do, more quality books than they do, but are being damned by being small and not part of a cartel or not sufficiently big enough a part of a protected cartel that are flushing fear into those units, chasing all their clients into sending deposit money to the bigger corporatocracy statist mega banks to use to buy out on the cheap those same small banks. But it's a fair game. Trust me, it's a fair old game, and the Fed is doing its damnedest to help them own the lot. That's right. You'll soon be left with a very small oligopoly of mega too big to fail banks that have all had their earnings boosted by buying up lower multiple smaller banks, thanks to the Federal Reserve's policies acting in the interest of the larger banker cartel families that are the people that issue your money, the only people with license to issue money. You will never be allowed to have your own money. You play their game by their rules. Try create your own game. Try create your own money. Try create your own rules. Watch how quick things go south. Anyway, back to the charts. Here we go. Amazon XAU USD, we go to, let's take it to the daily, and we can have a look at this little structure that is forming right here. Where's it forming, Francis? Where's it forming? Excuse me, sir. Where's it forming? Oh, that's a very good question, young man at the back. Allow me to answer that for you. It's happening to wind up right there on the neckline of that head and shoulder, inverted head and shoulder, with an upside projection that tells you you should be long gold, you should be long silver, you should be getting ready to long the hell out of those miners, and you should be getting the hell out of Rockefeller's New World Order. Spend all your vouchers in my store that I gave you. No, you can't have dollars. You can have this fake money I created. Only now I run the whole game, so the dollar is the fake money I created. So now you can have dollars. Sell that, guys. Business, buy real money. Buy real money in terms of gold and silver. So you have a wind-up HVF with upside for gold against Amazon. What about the silver on the inverted chart? So we've done Amazon versus gold, we've done Amazon versus silver, we've inverted the chart and done Amazon versus gold on the inverted chart, and now we're going to do Amazon versus silver on the inverted chart. Here we go, here we go, here we go. Back we come. Similar structure. You can absolutely see it. There she blows. I'm not going to draw it all over again for you. There it does. Made absolutely perfect targets. In fact, we had that done. We drew it on the inverted and it seems to have gone. I might have to draw it again. You nailed it on the neckline as it was for the upside round. So it is for the top. So is this now a bottoming? Well, let's have a closer look. After this beautiful period of non-stop dominance of Amazon. Well, it wasn't that beautiful, friends. I'm quite glad it's coming to an end, if you're asking me. That was it there, your 99 months, 2011 to 2019. There it fell out for the first time. Now can you see the potential turning? As the bottom pickers that you are filthy, dirty little bottom-picking children. How dare you, scratchy bum. Anyway, this is a reversal. This does look like a reversal to me, and it is a macro reversal in our opinion that has met a major target, progress, decay, laws of HVF, substantial sideways and or adverse movement that will see the likelihood of such further upside in short time frame proving very unlikely. Often part and parcel with reversals. That's what happens at targets of HVFs. There's your left shoulder, there's your spiky right after a bunch of money proliferation, and there's your head, and there is your triggering event that saw you break. As per the gold, so for the silver, with substantial upside targets. Remember the log scale that will further boost that. This scale is logged and point to exactly what we are saying. So what have you learned today? Well, apart from listening to a cranky man in a t-shirt with white glasses tell you funny stories, you understand the world order as it has been laid out. You have looked at Amazon as a benchmark for online retailer. We are highlighting the themes that are current at the moment. Retail is to be hurt and hit. That's you. That's why it's going to happen. You're going to be spending less on Amazon. Your cleaner's going to be spending less on Amazon, and your neighbor's going to be spending less on Amazon generally. And other businesses associated with Amazon may not be making the money, including the expensive purchases of the Top Gear guys and how much you're prepared to pay to watch Jeremy Clarkson pass a few dodgy comments and crash a few cars. Yes, that price will also go down as interest rates go up, all your loans, credit cards, because financialization of everything, such an awesome thing brought to you by your mega banks, currently gobbling up the small banks whose stocks they've likely shorted and have caused a crisis of confidence that sees deposits then migrate out towards them, away from those very same banks. What a predatory system we have, my friends. What a predatory system we have indeed. Anyway, go and make hay. Book the call on the link below. That's an order. It's time you made wealth in reset times. My friends, you are watching the slow motion descent. I've been on this channel since 2009 telling you death of dollar, ascendancy of gold and silver, but it will take time. We've been honest when it's been in a bear market with you. We are telling you it is strong and it is macro now. The banks are being wound up. The small rats and mice are being forfeited. The beggars and peasants outside the city walls are being sacrificed by the barbarians as Caesar hunkers down behind the walls and hopes he will survive. Initially, yes. Long run, no, my friends. And this is how you're positioned. Until next time, smash a like, give it a share. We appreciate your support. Book a call on the link below. I'm Francis, the Market Sniper. I hope you enjoyed this.